The profits of two of the largest oil companies in the world, both located primarily in the United States, are plummeting. They are crashing. I've been heavily criticized many times for saying this would happen. People have in person told me I'm an idiot for saying it. I mean, guys who think they're geniuses and they think that they've got a PhD, so therefore they know better. But, well, it turns out that it doesn't matter how you feel about how much money you've invested in oil companies. That doesn't change facts. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching the Electric Viking. Great to have you with us. And this is the kind of news that really brings a smile to my heart. Exxon Mobil and Chevron, their profits will have dropped to the lowest point since the pandemic. Reuters says that top US oil producers Exxon Mobil and Chevron are expected to report their lowest earnings in 4 years. Now, technically, it's not really the lowest earnings in 4 years because during the pandemic, no one drove cars, no one did anything, everyone went to sleep. So really, it's actually the lowest earnings if you ignore that bizarre anomaly in more than 10 years. So their results will be released on Friday this week, and they're not looking good. The April to June quarter covered a volatile period in which the OPEC plus group of producers continued raising their production volumes, putting pressure on crude prices and in turn cutting the profits of oil firms, said Reuters. Oscillating tariff policies from Donald Trump's administration apparently added to fears about weakening economies and oil demand. Now, the truth is that oil demand is weakening for one very key reason. We know what that is. It's people driving electric cars. People that drive electric cars don't use much oil. In fact, yeah, they do use some. They go on airplanes and, but it's a lot less, a hell of a lot less. Global benchmark Brent crude prices dropped 11% during the quarter from the previous 3 months, while US natural gas futures declined 9%. Investors had previously been watching whether producers would cut spending in response to lower prices. The market is now likely to focus more on company-specific results and commentary about the macroeconomic environment, said Jeffrey Lamboujon, an analyst with TBH Energy Research, in a note last week. Exxon, the top oil producer, is expected to post $6.67 billion in adjusted earnings for the second quarter, which is clearly a pretty bad number. This is a 27% drop from 1 year ago. That's a big drop. It's its lowest earnings since 2021 after the COVID pandemic sank global demand. But that does not include a few things, of course. Demand for oil during the COVID pandemic crashed, but it doesn't also include inflation. If you actually include inflation, ExxonMobil's numbers are pretty shocking because a 27% fall, if you actually factor in inflation, is actually closer to a 34% fall. It's a pretty big fall. The company signaled earlier this month that lower oil and gas prices will cut around $1.5 billion from its earnings compared with the first quarter. And I've personally begged people who are invested in oil, fossil fuels, not even for political reasons, not even for environmental reasons, just because I don't want them to lose their money. I don't want people who don't have the ability to lose their money to lose their money. And I feel sorry for people and they just ignore you. I don't understand it. One bright spot apparently is in refining margins. But anyway, the point is this. The Chinese, the largest oil company in China, which is one of the largest companies in the world, says the demand for oil will decline by around 5% every year. And around about the time they're saying 2028 onwards, it's going to fall by 10% per year. That's a big number. And that's coming from an oil company who has vested interest to not say that, right? But if you look at the demand for EV sales in China this year are up by around 35%. That's huge because China is by far the biggest car market. 34 million cars a year are sold there. The entire global car market is around 80 million. That means nearly 40% of all cars sold in the world are sold in China. And if the Chinese are not buying internal combustion cars and the Chinese government wants them to stop using them, then demand for oil will go down, of course. And as EV sales this year have grown by 30% worldwide, in spite of the United States going backwards, and in some ways Australia's gone backwards a little bit for some months, still, the truth is demand for oil for the transport sector is falling. And that is not going to change. It's only going to speed up. Wall Street expects Chevron, the number 2 US oil producer, to report $3 billion in adjusted earnings, or $1.70 per share, down 33% from the same period a year ago, and the lowest in 4 years. But 33%, adjust that for inflation, is probably closer to a 40% fall. Chevron closed its acquisition of smaller oil producer Hess on July 18 after triumphing in a legal challenge from Exxon that delayed the deal close by over a year. Chevron said the deal will lead to a $1 billion of cost synergies by the end of the year. It will provide updated financial guidance for the combined company during its investor day. Basically, Chevron is saying, you know what? We know that our profits are going down, but don't worry, we're going to acquire these companies and somehow that's going to save us, save our bacon. So keep on investing. Everything is business as usual. Well, it's not. The truth is that even shipping now is moving away from oil, which is crazy. I didn't expect this to happen at all. But now I've seen some of these enormous ships being built recently that are powered by huge batteries. And I think that that appears to be accelerating, which is not what anyone expected to happen. It's probably driven mostly by the incredible reduction in the cost of batteries that the analysts have not expected. But the cost of those batteries will continue to fall. And as the cost particularly of affordable lithium iron phosphate batteries and sodium ion batteries continues to fall, I think more sectors will electrify. Even sectors like trucking. I mean, 25% of all large trucks and in fact, all commercial vehicles in China this year have been fully electric. And that shows you where that market is also heading. Guys, do you feel the same way? Let me know what your thoughts are in the comments. And if you can share this video, that would be great and help support the message. Thank you for watching. Bye-bye. China's electric car boom has pushed the demand for oil worldwide off a cliff. Experts are saying over the next few years, we're going to see massive losses from a lot of these companies, BP, Chevron, Saudi, Aramco, China's own oil company. They're even predicting this. China's own oil company is trying to pivot into renewable energy because they're saying, well, we know what's happening. We know that by far the largest market in the world, the largest by a mile when it comes to demand for petrol engines, for cars in general, 32 million cars are sold every year in China. And those cars now are moving away from gasoline. Experts are saying this is going to cause enormous structural problems, demand problems for gasoline and for oil. And they've already passed that tipping point. Many believe we have gone past peak oil. Here's the numbers.